Hey, this is Kate McClarnon with Benchmark Realty here in Nashville, and I am tired of editing videos full of my face, so we're going to do this one a little differently today. Meet Sally. Sally just finished her bachelor's degree with $30,000 in student loans. Sally is proud of her degree and is ready to get a full-time job here in Nashville. She accepts a position in her field of choice, making $40,000 per year. Go Sally! She finds a Nashville apartment for $1,500 a month and starts her new career. Sally decides that while she's excited to have a grown-up job, the monthly payment on her student loan is too much with rent in Nashville being so high. So she applies for an income-based repayment plan on her student loans. Based on her loan type and the amount of debt and her income, the Department of Education allows her to drop her payment down to just over $100 a month, making life a lot easier for Sally. She knows that the payment will increase over time, but she also doesn't plan on making $40,000 forever. With hard work and experience on the job, she is hopeful that she can cover the higher payment as time goes on. After a year or so, Sally starts thinking that for what she's paying in rent, perhaps she could afford a house. Online searches and online mortgage calculators have Sally hopeful, so she reaches out to me. Here's where it gets sticky. What I'm about to tell you might make you frustrated or sad or angry, but do not let this stop you from picking up the phone if you are interested in purchasing a home. This is just one scenario to explain how student loans can have a ripple effect. Back to Sally. I connect Sally with a mortgage loan officer to get her pre-qualified and walk through her options. Sally has a little cash saved, so the smaller the down payment, the better. Knowing this, the loan officer looks at Sally's FICO score and looks at her monthly debts compared to her monthly income. You've heard me talk about this before. It's the debt-to-income ratio, or DTI. If it's too high, she won't get approved until she either A, reduces her debts, or B, increases her income. Because Sally wants to put as little down as possible, the FHA loan is the best fit for her credit score. She can put just 3.5% down. But a few years ago, the FHA changed how student loans are factored into the DTI. Sally's student loan payment may only be $100 a month right now, but that's not the number that the lender is going to use when factoring the debt-to-income ratio. Instead, they're going to take 1% of the total student loan amount. In this case, that number is $300. Add that to the $1,500 a month mortgage that Sally hopes to get approved for, and suddenly she is no longer within the parameters for an FHA loan because her DTI is too high. Sally needs to find a home with a lower mortgage, or wait to buy and live with a roommate to try and pay down or consolidate her student loans, or save more cash for a different loan type that factors debt differently, or work on her credit score. In cases like Sally's, great lenders will not just say no. They will dig deep into your individual set of circumstances and help you develop a path to homeownership. It may not be an easy fix, but it is always worth exploring your options because everyone's scenario is different. So what's the takeaway here? Student loans are not a death sentence when it comes to homeownership. Yes, it can make it more difficult to get approved for a mortgage, but remember, not all mortgages are created equally. Only a mortgage lender can give you the real deal because, again, everyone's situation is unique. If you want a path to homeownership, do not let the weight of student loans prevent you from exploring your options. The worst thing a lender can say is not right now, and there is no shame in that, but you'll never know unless you do the legwork. I am also here to help. I hope you know by now that I want you to think of me as a resource. I am not a pushy realtor. I'm here to walk with you side by side through this process. So if you have questions, call me, text me, comment below, and I hope to talk to you soon. Bye. 4-0, baby. Tighten up.